All right, we are live. Good morning, everyone. Paul here with GammaEdge. Today is Monday, the 26th of June. Let's get started. Pause your players here. You know the drill. Let's get going. So the summary for today, probably no surprise. We are still in this bearish confirmation phase on the 0DTE and the 1 to 3 day swing trades. The cumulative tick closed below the previous day. This is day 5. This is getting a little long in the tooth, but all that being said, we would not be surprised if we continue down through the week or bounced around. We'll see. You'll see that here shortly. Railroad track pattern, continuation day down, day 4, basically just telling us to stay the course, but we are mindful of an intraday reversal to the upside. Could happen. We actually have a lot of charm support below us, and you'll see that here shortly in a couple slides. The long-term market model, which is the ribbon, as you guys know, time frame is 2+ weeks. I don't want to hear any feedback that this is a lagging indicator. Of course it's a lagging indicator. It's a series of moving averages that are targeted 2 weeks from now. It is failing. And it's failing from a long status. So our counsel to you is when you're paper trading these things, no new longs and start tiptoeing into short deltas. You can basically, as long as we stay below the ribbon, we are mindful that you can probably sell the rips. So just be aware of that. Transitions, we closed at 43.48. The PM settled complex and the combo complex both have plus trans at 43.70, and they have minus tran at 43.05. When these are coincident like this across multiple time frames and multiple vehicles, meaning the PM settled and then the combo, that's pretty powerful. That structure is locked in place. It's not moving around. It's pretty wide. But be mindful that we're probably going to be more or less range bound, and we'll talk a little bit about that this week. We still see the overall transition is worsening to the lower side. There's some indecision that's going on down there, and you'll see that on the last slide, the landscape slide. And then finally, SPX structure here. So we're sitting at that 43.20 for the minus GEX level. That's the left goalpost. It's very dominant. It's just going to grow for this week. Be mindful of that. And last night on the open mic, we talked about pinning and why that occurs. Make sure you have an opportunity to watch the open mic last night. I posted it in the announcements channel. Plus GEX remains up at 4,500. There's clearly people who are targeting the 4,500. In the combo complex and are thinking that we're going to go there. So any movement upwards, they'll be rewarded, but it's not probably going to be this week, and you'll see why here shortly. We are seeing out-of-the-money calls being removed from the structure, and when you see that upside speculation vaporizing, that tells you in the short term people are getting a little nervous. Or just are under the realization that we're not going to move up there. So why let those things collapse to zero? And we are this should say out of the money puts. Sorry about that, guys and gals. This should say out of the money puts are being added, which is the short term downside. Speculation is growing. So now we're seeing puts being added below us. So any drop will be accretive to them, and that's kind of how the market cycles go. For the 0DT folks who are watching, plus trans 43.55, minus trans 43.05. So we closed 43.48. Plus trans is a little bit above us. Minus trans is still down here at this 43.05 area. Just be aware of that. This is a pretty important level, this 43.05. It's going to play a role more or less throughout the week here today. We have a very, very strong put-dominated expiry. You'll see that on the 0DTE chart. If we can remain above this 43.35, we have a chance of the puts having a significant charm mechanism. We'll talk about that. Put dominance starts right where we are, 43.50. It's solid all the way on down to 25, and then we've got a little bit of a weakness below that, and then we pick back up right at 4,300 down to 42.85. Not seeing a lot in dominant call strikes above us. It's pretty weak. Puts rule, and so just be aware that in the shortest term speculation on the 0DT and the 1DT, very few people are banking on the upside. Not predictive, but certainly the speculators and the wisdom of crowds does rule here. We have a low exposure area at this 43.20. Note that is the JPM, but for today and into tomorrow, it is low exposure. It means there's just nothing there. And extends down to that 43.05. Everyone always wants to know the parking spots, 20, 10, 0, and then 42.95 are the downside pinning zones. If we can remain above this 43.50 area that we're in, want everybody to pay attention to just above or below the 43.75, and of course, watch the value command today in the Discord. The overall market model, 3 time frames indicated here. The bolded white line, of course, tells us the instantaneous cumulative tick, and you can basically see it's been in a downtrend, as we said, by 5 days. When it crossed the ribbon, this is a heavily back-tested first warning sign across the bow signal, and so this is basically telling us to protect your long positions, and we continue down. So you see why we advise this. Now that we've dropped below the cyan line, which is the slower moving average, the long-term timer is now under pressure. You can see that over here on the yellow side. We're going to expect this to start collapsing. The slopes of these lines, the red line and the blue line, the cyan line, are now going to be negative. And what that means is that we're going to get a collapse of the timer, and basically watch for it to invert. Now, when you get a long sequence down like this, it's very possible you could invert and go back up. We have no idea. This is not predictive. This is just a long-term indicator. So if you have some long-term positions, you may want to take some profits, just looking at what we're seeing here. Taking a look at the gammas charts. This is the PM settled complex. The first thing to note is that overall we have flipped to a put-dominated structure in the PM complex. You can see that up here in the right with a negative gamma condition and negative net GEX. Here that in the red box, I've highlighted that we've got a number of strikes which are now dominant within the money puts. That means the out of the money calls have vaporized, and we are now basically the speculators in the PM complex are walking away. So just be aware of that. We also have a coincident 4400 with the plus GEX and the COI. And why that's important to us is that is a kind of a double whammy. It's going to be very, very hard to get above that for reasons that we talked about last night in that pinning mechanism with the as we get into these structures. So just be aware 4400 is going to be fairly dominant for the short term in the PM structure. But look at this 4375. It too is fairly dominant, and you can see right here we've got the plus GEX at that 4370, or not plus GEX, the plus trans at 4370 and minus trans down here at 4305. Again, the 4305 will become a important number as it does show some space underneath that 4320, which we think is important because this is the JPM strike, and that's, you can see it's consuming all of the oxygen in the room. Taking a look at the 0DT, which is probably of most interest to the folks watching. Very, very large negative expiry today, and I think that's pretty important. Again, here's the transition, highlighted it for you. Here's that 4305 again, right? So that's a fairly big deal. We're getting this lower number as a confluence across the PM settled, the combo, and now the 0DTE. Pay attention to it. That's worth your time to just kind of track that. 0DT shows most likely why we pinned where we pinned into the weekend. This is this 4350, 4355, and yes, I know we're at 4348, but just be aware, low pressure area, fairly significant, and if we can stay at the top of transition, that's bullish. There's no question about it. Here's that 4375 again for today. It's kind of the upside target with the 4400 still showing the 0DT COI. That said, your eye is obviously drawn to all of the red. So what happens? There's a series of if-thens here that are really, really important. If we lose the 4350, meaning we fail to break up and move up into this range today, which would actually be really good because with all of these out-of-the-money puts decaying, it is the 0DTE, these will have positive charm flows, and that will be supportive overall. That will cause deltas to go up for the dealers, or down for the dealers, and as a result, they will have to buy, which will be supportive. But as we drop through this range, what happens is many of these puts will now become in the money from an out of the money status, and their charm will flip, and that will be a negative going charm, and that will work against us in terms of the support. The deeper we get into the quagmire, into the transition, the worse it becomes. There is a pocket down here, as I was talking on the earlier slide, this 43.05 to 43.20. You can see that that's a kind of a hiding zone, and we got some delta transitions in there. It's a perfect hiding place for overnight. Be aware of that. Going lower, this double structure at 42.95 and 42.85, that too from up here looks like one big blob, right? So if we lose this, then this could be a pinning mechanism, and we could sit on the top, we could sit in the middle. And if we do lose the 42.85, which is also the 0DTE POI, I don't anticipate a rapid decline, but you can see that we could pin on either side of this thing pretty easily if we do lose the 42.85. Again, for the same pinning mechanisms that we talked about last night. So watch the 0DTE through the value 00 and 01 command, and that'll give you a kind of a view of what's going to be happening into tomorrow. So here's what tomorrow looks like. First of all, I know this jumps off the page at you at 4340 and 4300, but up here in the total OI, 93,000 contracts. This is an incredibly small, this is less than 50% of what we normally see. We normally see about 200,000 contracts, and just by, you can see here on the 0DT, it's over 300,000. So on the 1DT tomorrow, not a lot of pressure going on either way. So these stand out. So today's value command will be really, really important. If we lose the 4340 into the afternoon session, it's very, very possible we could get trapped in between this 4300 and the 4340. Just be aware of that. Don't really want to read much more into it because it is so weak. When things are weak, they're noisy, and they don't really have direction. So the 1DT is going to be really, really hard to interpret, but you can see the two dominant lines for tomorrow. We talked about this last night on the open mic. So net negative expiry this week, largely driven by the 4320. So we have this downward force that is amongst us. We have the pinning mechanisms that are going to drive us into the 4320. Now remember, just like at the end of March, we can overcome this if we target either below or above, right? If we see a lot of calls being opened up, that could pull us back up and break the tractor beam that we have from the deltas here. Now, that being said, right now, the 4320, which is the JPM strike, which will roll on Friday, is the gorilla in the room. And you can see in terms of what we're looking at in overhead, although we do have some pockets here where the deltas are flipping, we've got basically very little speculation to the upside this week, right? So that's your takeaway here, although there's that 4400 COI for the week, 4375, which is the dominant plus GEX strike for the week. You know, it just depends on where we are. It's a sequencing issue that's not predictive. You know, we don't want to hear that Gamma's not, you know, telling us where we're going. Of course it's not. It's just telling you sensitivities, and you can see where the sensitivities are. The combo complex here, very, very strong on the quarter levels. You can see that. Here's the 75, 4400, 50, 75, and 4500. Not shown all the way up at the top. 5000 strike is very dominant. It is actually the COI for the combo complex. So there are a lot of folks sitting up there right now, just you know, looking at you know, maybe some long-term speculation. COI doesn't have a time frame with it. It is just purely answering the question, at what strike in the complex do the most calls sit at? And right now it's 5000. That's fairly remarkable, so just be aware of that. The box shows transition. Here's that 4370, 4305 that we talked about. Here's the JPM strike, 4320. That's a big deal. We're in this noisy area. I would expect noise within transition. I think basically the transition structure is showing, you know, we've got some weakness starting to creep in now with the delta showing some strikes where there is no out of the money call dominance. It's all in the money puts, which are driving the red ones that you see here. Although you can see there is still a lot of green up here, so there is still out of the money calls. There are a lot of speculators to the upside. That's why we have a market. And you can see we're net positive. So we're not, you know, betting the farm to the downside yet, and you shouldn't either. But just be aware, short term in the PM structure is down. 0 DT, 1 DTs are down. The week is down. But longer term, things are still looking bullish. When we see this whole thing flip red, then you know where we are. We're not there. And you can really see that here. You can see the JPM strike here at 43.20. This is minus GEX right now. Plus GEX, the right goalpost is at 4,500. Here's the 4,400, which is the next contention. And so if people give up the 45, we'll see the 44 grow. Let's see if most likely if we stay below it. This last line in the sand is that 43.10, 43.05 area. That's the important strike. That's why minus trans is sitting right here, because it is the strike at which it and all the strikes below it are put dominated. Here's the end of July line, which will continue to grow until it's pounded into submission through long calls. But here is the JPM strike for the end of this week, and it's just going to continue to get bigger and bigger and bigger. So with that said, just take a look at this, know where we are, right? We're at the in this transition area. It's that weak area. We need to get above, obviously, the 43.65, 43.70 zone. That's why the 43.70 is plus trans right here, because it is the strike at which it and all the strikes above are call dominated. If we can get up into that area and stay up in that area, we can make a chance to run at the 44 and the 45. But if we can't get up there, it's obvious we're not, we're just going to be noisy back and forth in the transition. That's why we track transitions here. So that's it. I'll spare you all the details. Everybody here who's watching live knows this. So with that, I will cease to record and we'll take any questions. Thanks, everyone.